I want to get your reaction both to this cut by the Fed today and also the pretty wild swings we're seeing in the stock market in response.
Absolutely. I don't think anybody is really surprised by what the Fed did. It would have been very disappointing if they did 25 basis points. I would not even have been surprised if they did 100 basis points. So, as a matter of fact, I wrote that up on Monday, so I was half right. We got the 50 basis point cut. But this was all signaled by Jerome Powell on Friday when he issued a statement saying that the Fed would do whatever is necessary to help the economy overcome the coronavirus. And the bond market's been anticipating that the Fed would do exactly what they've done. So there's kind of sell on the news going on here, a little bit of a recognition that there's really nothing the Fed can do to cure us of this virus plague that seems to be spreading around the world. And I think it's getting to the point where a lot of us have come to conclude that enough already. I mean, the Fed can't fix everything, and by trying to convey that Fed policy can do that, it's disconcerting.
Ed, I wish we had more time today. Appreciate that very much for coming to the phone. Ed Yardeni, we'll talk to you soon. The sell-off here, obviously, still in place. Dow's down 422. The Fed's rate cut got some support, though, from former Council of Economic Advisors Chair Jason Furman, who tweeted, "This was a bold and correct move by the Fed. You should judge its success not by the stock market, but the bond market." And the interest rate on the 10-year note is down about 6 basis points to 110. Of course, it's since moved to south of 103. Jason Furman joins us on the phone. Jason, good to talk to you as well.
Good to be here.
You still feel good about this?
I mean, I don't think there's a whole lot the Fed can do, but this is certainly on the plus side of the ledger, what they did today. They surprised on the upside. That's why you're seeing a weaker dollar. That's why you're seeing interest rates down. Those are the things that matter the most in the economy. They can't stop a recession if supply chains completely freeze up, but they can, do what they can do, and that's what they've done today, and indicated they'll continue to do if they need to.
Yeah, he even said cuts will not reduce the rate of infection. It won't fix a broken supply chain. What do you think happened between a Powell statement on Friday and 10 o'clock this morning? Was it a sense that fiscal policy was going to be stubborn to come to fruition? Yep. Was he briefed by some health officials? What do you think happened?
We're just learning more every day. I was never worried about supply chain disruptions in China bringing down the U.S. economy. It's when the virus comes to the United States that you have to worry, and the amount of community transmission that we've been seeing in Washington and Rhode Island and New York, around the country, is just growing, and this is exponential. That's the way something like this works, and each day we're learning more. So could he have acted on Friday? Sure. Does it matter that he took 2 extra days? Not at all.
Jason, I want to get your thoughts on, given the fact that we are seeing these massive swings in the market, if you are somebody who is not day trading, not paying attention to the market every day, but is invested in the market, you're tuning in now, you're seeing this. Do cuts by the Fed actually help to quell your fears and help, support or sustain household confidence when you're seeing 700-plus moves in the Dow in the course of a couple of minutes?
Yeah, I think this is less about confidence and more about, the actual, what the interest rate is, what the value of the dollar is, what that will mean for American exports, for borrowing in America, mortgages, and the like. I think confidence here matters too. It's just it's hard. 24 hours from now, people are going to forget this move by the Fed and just be focused on whatever the latest case of coronavirus that they're hearing about is. So the confidence of this only lasts so long. In terms of most investors, I would just sleep easy, try not to watch CNBC, and check what's happening to your stocks on any given day. I'm just kidding. Of course, watch CNBC. Yeah. Just don't trade every minute based on it for most investors.
We're okay with that.